Hello, good morning to all. Yeah, so give me a minute. Yep, hi. Good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So welcome to today's Daily Dose of Market Insights. So today will be Tuesday, 12th of September. So, all right, so now let us get started. So before we start, let's take a look at the disclaimer slides first. All right, leverage trading is risky. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. So as usual, before we start, three main key takeaways out of this daily dose of market insights will be a recap of key events and highlights that took place yesterday, and what are the key data to look out for, as well as events. And lastly, will be short-term technical analysis outlook on the various interesting short-term configuration, or I would say interesting configuration that has started to appear in the various asset classes, be it FX, stock indices, or even commodities that I will share with you all later. So let's start with what happened overnight. So overnight, we start to see a rather positive US stock market session, but however, the dollar strength actually set back as expected, which we highlighted yesterday, also being kind of reinforced by BOJ, Bank of Japan, Yuda, weekend comments on this quietly exiting from a decade plus long of ultra dovish policy in Japan. So let's start off with the US stock market last night first. Okay, so let me share my screen for you all, or let me focus more on the screen instead. All right. Okay, so this is what happened in US stock market yesterday. This is the S&P 500 heat map, daily heat map of yesterday performance. So we start to see a very strong outperformance on the mega cap technology stocks. So the fact that S&P 500 actually had a positive daily gain of 0.67%. The strongest performer be the Nasdaq 100, up 1.19%, 1.19%. But however, the Dow Jones and the Russell 2000 is kind of lackluster. They only gain close to 0.2%. So not a really kind of a very all-out strong rally in the benchmark US stock indices, given the lackluster performance on the Dow Jones and the Russell 2000. So what causes this, we call it catalyst in this strong push out on the mega cap stocks? Mega cap technology stocks, especially metal, is up 3.25%, and amazingly, Tesla is up 10%. They're actually driving the gain of this Nasdaq 100 as well, because given the fact that Tesla is the seventh biggest cap in the Nasdaq 100. So what we could see over here is that Tesla last night during the US session, there's actually an investment bank, Morgan Stanley, actually upgrade Tesla to a price of $400 per share from the current price of 250. So that's a pretty significant, huge jump, given the fact that there's this potential under appreciation of this supercomputer called Dojo. So it's relatively unknown by the market at this point in time. Based on Morgan Stanley report, they added that this Dojo supercomputer could add as much as 500 billion to the company's market value. So that causes a spike up of 10% in the Tesla share. And also over here, there's this news by Meta as well. So Meta, you know, that is the parent company of Facebook. So what we could see over here is that Meta is actually developing this much kind of new, more powerful AI system. Okay, so right now it seems to be that the AI hype is actually back on Meta, so giving it a gain of 3%. So what we could see over here is that the biggest heavy cap on S&P and the Nasdaq 100, which is Apple. So Apple actually inched up by 0.7% yesterday. So this rise in Apple also been what I call have a spillover impact on Meta towards Apple. And most importantly, it was actually anticipating today's flagship Apple event, where actually Apple will start to announce a slew of what I call latest product, which is today in US session. So at 10 a.m. US session, so that will be 1 a.m. Singapore time later on Thursday or Wednesday morning. Right, so Apple actually revealed the price tag for iPhone 15 together with their watches and AirPods. So that given a bit of what I call positive sentiment back into the US. We call it Nasdaq 100 and S&P yesterday. So now with that, now let's take a look at the technical analysis chart for now. So let's start with the benchmark indices first, since we're talking about the US. So let us kickstart with the Wall Street. All right, so let me open up the chart. Okay, so this is the Wall Street 30, the Dow Jones. So Dow Jones, what we could see over here is that yesterday it actually managed to squeeze up, but didn't break above our key short-term pivotal resistance where we highlighted at 34,710. So all in all, right, we still, and also below that 50-day moving average. So all in all, we still could maintain that short-term bearish bias on the Wall Street 30, holding below 34,710. Right now, we need to have a break immediately below this intermediate support level at 34,520. So a break below 34,520 will kind of reinforce this short-term bearish bias to test the next support level at 34,335, which is so the minor swing low of 7th of August and 7th of September minor swing low area. Okay, so but however, if we start to see an hourly close above 34,710, then this short-term bearish bias will be invalidated to see a kind of a push up towards the next resistance level over here at this minor congestion area of 34,890, then followed by 35,050 on the US Wall Street 30 index. So still maintaining that short-term bearish bias, given that 34,710 key short-term pivotal resistance hasn't surpassed to the upside. Now, moving on will be the Nasdaq 100. So what I could see over here is that Nasdaq 100 yesterday, it managed to actually did a squeeze up with our Titan key pivotal short-term resistance that we have 2 days ago or 2 sessions ago at 15,430. So what we could see over here is that the short-term bearish bias has been invalidated. So given the fact that we have this important event of Apple coming out later tonight, there could be a bit of volatility coming into play of the market. So perhaps we will start to actually turn to a more neutral stance for today between the minor swing high of 4th of September and 6th of September, which is acting as a resistance at 15,550, followed by that strong push up that took shape yesterday right at the 15,350 level. So neutral between 15,550 and 15,350 on the Nasdaq 100 for today. But however, if we start to see a breakdown below 15,350 later, we could actually kind of reinstate that short-term bearish bias towards the support level at 15,170, which is the minor swing low of 7th of September, as well as the 20-day moving average level. But however, if we start to see a breakup above 15,550, then we should start to see a much more stronger push up towards 15,630, followed by 15,800, which is the 29 of July swing high area, and as well as also the top of this minor ascending channel resistance that is in place since 18th of August low this year. Okay, so switching to more of a neutral stance for the Nasdaq 100 for today. Okay, now moving on will be the German 30. So if you call the German 30, yesterday we turned bullish given the fact that elements has starts to turn, short-term elements have started to turn positive. Overall, the hourly RSI continue to shape a higher low above the 50 level mark. So what we could see over here is that short-term bullish momentum remains intact. This is a 1 hour chart. So I will actually tighten the key short-term pivotal support level to 15,750 for today, looking for a further potential push up, a break above 15,850, potentially could see a test on the next resistance at 15,938, which confluence with this minor congestion area over here, 1st of September and 4th of September, and as well as the 50-day moving average. So still maintaining that short-term bullish bias on the German 30 index with a tightened key short-term pivotal support at 15,750. However, if we start to see a breakdown below 15,750, then then the short-term bullish bias will be invalidated to see a start of a we call it a short-term minor impulsive down move to retest the swing low of 8th of September and the 25th of August, acting as a support at 15,570. Okay, now moving on will be the Hong Kong 33 index. So no change for the Hong Kong 33 index, still using 17,790 as a key short-term pivotal support. Early this morning, we see a bit of a jittery or weakness, but however, price action managed to stage a bullish reversal right above this, very close to that 17,790 key short-term pivotal support that we highlighted yesterday. Hourly RSI has now managed to inch up above the 50% level and starts to break up above the previous swing high, the previous minor swing high, now acting previously was resistance right level. So all in all, you could see a bit of what I call short-term upside momentum or short-term bullish momentum still remains intact on the Hong Kong 33 index. So still looking at 17,790 as my key short-term pivotal support level, looking for a further potential push up to test the intermediate resistance at 18,290. A break above 18,290 potentially could see a further potential upside to test these 6th of September minor swing high area, acting as a resistance at 18,550, which also confluence with the former minor ascending trendline support from 21st of August, now turns into a pullback resistance as well. All right, so still maintaining that bullish bias on the Hong Kong 33, unless this 17,790 is taken down on the downside, we potentially could see a kind of a start of another round of we call it bearish, short-term bearish tone to retest this 21st of August swing low area at 17,570 slash 17,370 support level. So now we covered much ground on the indices. No, so let's take a look at the FX market. Still recall the FX market, we said earlier on that we start to see short-term dollar strength setback coming into the picture. So what's interesting over here is that this short-term dollar strength setback actually took shape right where the dollar index right now starts to shape a kind of a bearish reaction of the upper limit of this 104.45, 105.60 key medium-term pivotal resistance, and also the daily RSI has started to shape a bearish divergence as well, right at the overbought level. So all in all, right, potentially we may start to see much more, we call it a multi-day, at least a multi-day potential short-term dollar strength setback story coming back into the picture potentially. So with that, right, bear in mind, we still have that short-term bullish bias on the sterling dollar still remains intact, holding above 124.45. So this we call it analysis has been flagged out since last Thursday or last Thursday or last week. So still maintaining that short-term bullish bias, 124.45, a break above 125.50 potentially could see a further potential push up to test the next resistance at 126.40 on the sterling dollar. But however, a breakdown below 124.45, then we could start to see the continuation of dollar, we call it strength, to actually see a further push down towards the next support level at 123.40. Okay, so something new to actually to take a look on will be the Kiwi dollar. So this Kiwi dollar I will share for today is that we start to see also we call it strength of dollar weakness coming into play. That means Kiwi strength against the dollar because this Kiwi dollar. So we start to see Kiwi dollar shaping a higher low since 6th of September, and as well as the hourly RSI has also started to actually held above this key parallel support at the 43 level, and right now it actually managed to actually inch up higher above the 50 level, indicating to us some signs of a short-term bullish momentum being seen in the Kiwi dollar. So all in all, right, we'll be using 59 figure as a key short-term pivotal support level, looking for a further push up in the Kiwi dollar, a break above 59.40, potentially could see a further test on the 30th of August and the 1st of September minus swing high area, which is also confluence with the psychological level at 60 cents, 0.60 level of the Kiwi dollar. But however, if we start to see a breakdown below 59 figure level, potentially this short-term bullish bias will be invalidated to see a slide to retest the 5th of September and 6th of September swing low area acting as a support at 58.60. So this is one new analysis to take a look out for on the short-term potential bullish bias on the Kiwi dollar. All right, so now with the dollar yen, so let's take a look at the dollar yen. So dollar yen yesterday we flipped to a bearish bias, holding below the 147.90 key short-term pivotal support. Still, yesterday price action did is push down, tested a 146.30 level before trading sideways. So still no change. We do not want to tighten the key short-term pivotal support to too tight unless 146.30 is clearly taken down on the downside. So still maintaining that 147.90 key short-term pivotal resistance level. A break below 146.30 later potentially could see much more further downside, at least in the short term, to retest the 24th of August and the 2nd of September minor range support at 144.60. But however, if we start to see a breakup, a clearance above 147.90, at least an hourly close above it, then we could see a continuation of this uptrend to actually test 148.40, 148.85 level. So that is the key medium-term resistance zone on the dollar yen. Okay, now one more instrument to share will be the WTI crude oil, will be the we call it West Texas oil in our platform. Still recall that last Friday or last Thursday, we have that bearish short-term bearish bias to play that we call it a minor corrective pullback within a short to medium term uptrend. But however, it seems to me that price action didn't actually materialize within our expectation. So right now it seems it has started to actually trade in a bullish ascending triangle configuration on the hourly chart, and also the hourly RSI has started to shape higher low, and right now it has managed to rebound off from the 50 level mark as well. So all in all, we start to see a kind of a much more inherent or a resurgence of this short-term bullish momentum coming back into the West Texas oil. So I'll be using 86.25. So we are flipping to a bullish bias instead. 86.25 key short-term pivotal support, looking for a potential bullish breakout of this minor ascending triangle range configuration towards 89.10, then thereafter 91.20/60 key resistance level to watch out for on the hourly chart. But however, if we start to see a breakdown below 86.25, then we will start to see a revival of this short-term corrective pullback scenario to test 84.90, followed by 83.60, which is the 20-day moving average, acting as support, and as well as this minor ascending trendline support that is in place since 23rd of August. So all in all, due to the resurgence of this short-term bullish momentum that's seen in West Texas oil, so we'll be flipping to a short-term bullish bias using 86.25 as a key short-term pivotal support for today. So all right, so before we actually end today's session, let's take a look at today's economic calendar. What are other key events to look out for later throughout the session for today, for Tuesday? So today's calendar over here is not pretty light. So during the European session, we will have the unemployment rate for UK out at 2 p.m. Singapore time, then followed by Eurozone economic sentiment index out at 5 p.m. Singapore time. So we do not have key economic data releases on the US session for today, other than the key event, which is corporate key US event, which is the Apple flagship announcement or the release of their new iPhone 15, as well as other range of new Apple products. So investor will keep pretty much close eye watch on this Apple new product launch, especially on how they're going to price their iPhone 15, being that one is their main revenue generator. All right, so with that, I'll end today's session. So thank you for your time and have a great day ahead, and we shall speak again tomorrow.